When somebody gets traction in one of these games, what kind of number of users do you think it onboards, and active users? So people who are actually collecting collectibles in games, stuff like that. What are we thinking this is going to do to the space? When somebody gets traction in one of these games, what kind of number of users do you think it onboards, and active users? So people who are actually collecting collectibles in games, stuff like that. What are we thinking this is going to do to the space? Because gaming is so vast, right?
So I have two examples. One is another game that's launching on Avalanche. It's a public company called Nexon. It's publicly traded in Japan. It's an Asian company. They have a game called Marble Story. There's about 200 million. It's been around for 10 years. It's a more casual game, so it's not like the graphics of Off the Grid, but it is a well-used and has a lot of longevity, almost 200 million registered users. They have 500,000 to 1 million in terms of monthly active users, depending on what's happening. They are going to launch a blockchain-enabled version of it in parallel with their existing game. So that will be the first test case of how many people start migrating to do. They're doing it for two purposes, not just for user better self-sovereign data and feeling like you own your assets on the user perspective, but some of the highest margins for a lot of these games is UGC, user-generated content. So the composability of tools on an open permissionless network allows their users, their players, to actually become developers and create new modules or new assets, and that's actually free content. So some of the best gaming companies out there with the highest margins, it's because they have users who create content. And that will be an example of a large existing base of Web2 gaming that will be migrating, and that'll be a specific example. Now, I have some numbers of other things that are actually happening. It's not as big as that, and they're slightly in a different space, like in royalty. We can talk about now or later.
Before we go on to royalty, and real world assets and stuff, just on a side question, I'm seeing a lot of interest from Japanese corporates. We've just seen Sony announcing its own layer 2. You're obviously doing stuff with Japanese corporates. I'm seeing it everywhere. What is happening in Japan that's suddenly kind of switched on the light bulb for the Japanese corporate players? I understand a lot of gaming comes out of Japan as well, but what is going on there? Are you seeing the same?
And rest of Asia too. Korea,
yes, Korea as well.
Clear. So I think what's going on is we always have the perspective of a U.S. person, and the regulatory environment here has gotten harder, whereas the clarity has happened elsewhere in the world. So I think what you're seeing is Japanese corporates, Korean corporates, and other places in the world don't have as much uncertainty of what they think a stablecoin will be or not be going forward, and what's considered a security or not a security going forward. And they're willing to now take the steps in terms of developing technology for that when that clarity becomes imminent. In the U.S., frankly, I think it's still more uncertain and the rules are still more vague. So it's almost like looking at it in reverse. It's like they're doing it on schedule. Unfortunately, we in the U.S. are off schedule a little bit.
How are you seeing things right now? What are you getting for your sense on the ground with your, technology perspective, your investor perspective? How are you seeing the state of the world?
So I am now an operator, not a hedge fund person anymore. But that would be the question I would ask if I were still a hedge fund. In fact, I would be trying to find people like me all day long to ask them about the fundamental operating trends. So you still have your instincts with you, Raoul. So I think if you take this you have to look at the 1 year plus trend. If you look at it from about a year ago to where we are today, today is the day, just so people know, that Fed may cut rates. I think the macro backdrop is actually fantastic, and no one's better at talking about that than you, so I'll leave it to you to talk about that. The liquidity situation, as you talked about, is also improving. I'll talk about the fundamentals of individual assets in the space. I think in general, what we're seeing is a little bit of dispersion now. Not everything is all treated as the same anymore with just different betas. Now, the market is actually a little discerning and trying to figure out and giving the quality assets more respect. And that is based on fundamental trends. And I can tell you from where I sit, there's been a lot of potential partnerships, crossover from traditional Web 2 as well as TradFi, who want to use the blockchain to enable some application, to enable some sort of feature, or to have a better backbone for their B2B infrastructure. And that is all happening. On the native side, the P4P and in the crypto native side, I think things have been, frankly, a little bit quieter. I think the adoption curve for natives has gotten to a point where we really need to see more people crossing over and taking the belief and diving in, like you and I did way back when. And that's only going to happen when you see better applications and real use cases.
So you think that we're at the point where it's difficult to onboard the kind of investor type who's curious, and really the next phase has to be this applications layer that we've all been talking about, working on and thinking about?
That's correct. I think this is now a few cycles. I've been involved now for 3 cycles. You've been involved for at least 3 cycles. And it's grown. I mean, I know you regularly talk about there's 500 million users in the space. I'll differ a little bit. I think there are 500 million investors and speculators, actual developers, and actual users of on-chain stuff is actually relatively small. So there's still a long way in terms of penetration for actual usage. And that's what I'm talking about. What I am seeing is developers, both in crypto native and in Web 2, are experimenting and ready to launch things. But there's a short-term and a medium-term issue. I think in the short term, frankly, they want some certainty in the regulation. And after November, for better or for worse, I think people are going to start moving. It's kind of like the gun just went off and you're at the starting line. Whether it's good weather or bad weather, you're going to start running. So, but while you're still waiting, no, you don't need to figure out if you need to put on a pair of sweatpants or not. You can at least hold off a little bit. There's no like urgency to go do something since we're so close to November. So I think that's one thing. And another thing is, frankly, I think these new entrees into the space, unlike in the past where they would buy it on Coinbase and then somehow easily figure out a way to get into ecosystems and try things out. If you own an ETF, you're actually parking it somewhere, and you're not really getting what this whole space is about, which is utility and usage. So there are probably more people involved, but they're not involved the way an operator will love it to be involved, frankly.